Good morning, traders. It is Monday, November the 4th. Taking a look at the charts, we got the SP 500. If you take a look at the recent price action, you can see last week the market was struggling here at this resistance trend line and ended up closing the week fairly strong with a pop to push to new highs with a gap up. And today we're going to see the market gap up again. This feels like, well, at this point, it looks like a breakout. The trend is up, and we're going to see a gap up here. Now, we talked about this yesterday. You can't really see it. Let's just move over to here. And if we take a look at this one indicator right here, this red one here, this is the NYSE volume ratio, and it closed at 4 on Friday, meaning when it's over 3, that usually means everyone's piling into the market. It usually means a short-term top should come into play here very soon. It means everyone's greedy, everyone's covering their shorts, everyone's buying long, and we're going to see the market gap up here. So this will be two big gaps back to back with today's open price, and we're going to be extended here with everyone moving in the same direction. The VIX is down at a very low reversal level. The put call ratio on average has been trading very low, indicating there's no real fear in the market. And that's the sign that we could see the market pull over. Now, overall, the trend is up. We're not trying to pick a top. We want to see a topping formation start to form, for it to stall out, and for us to roll over here and start to see a correction down to the lower end of this range or potentially lower. So once the market starts to roll over, we can look to get long precious metals, potentially short the equities markets for an initial drop. There could be a bunch of different plays depending on how things unfold. At this point, the market is broken out. We are having an exhaustion type of gap up, what looks to be today. So we'll see how things shake out this week. But overall, this last week and this week, I think will be pretty pivotal moments in the market. Now, if we look at the safe haven plays, bonds started to show some pretty good life. I think they're going to start to hold their ground here a little bit over the next few sessions, and I think they're going to start to build a base. I think this here is the start of a basing formation where we could start to see this work itself higher and chop around here. This will be kind of like the base, and I think eventually we could see it move up. There will be a falling trend line here that if it breaks through, we could be off to the races to really start to pick up speed. Now bonds are in the early stages of a base. If we look at gold, gold has got a little more mature of a basing formation. Let's move this intraday chart over. Let's just look over here. If we look at the gold chart, you can see we are in the later stages, meaning we've seen price come down and chop around, come back up, came back up again. So it's got a much more definitive line in the sand for where gold is trading. It's down today. Obviously, if money is piling into equities still and chasing prices higher with no fear, money is not really flowing too much into the safe havens. It's not flowing out in a big way. There's still a lot of money rotating into metals, so they're holding up really well. When the stock market starts to crumble, I think we can see this pop, and we could start to see this really pick up speed to the upside. And this is what happened last time. We got into this area, it had a head fake and came back down and chopped around for a while until we finally saw it really pick up speed for that big push. And we could see that same thing, could chop around here for a bit, but I am expecting it to start to break higher. Now, if we look at silver, it's up 0.5% this morning. Same type of thing. It's been putting in a bit of a bottoming formation. It's kind of holding up a little bit more positive in terms of this previous high here. It has broken that, it kind of pulled back, and it's flirting through that area, but overall still looks pretty strong, and I think it's just a matter of time before we see the metals here move higher. Gold miners, same type of thing. They have broken these previous highs, which is a good sign. And overall, they're leading the way, which is nice to see. I do like potentially the gold ETF the best. It's got a clean chart, hasn't broken out yet, and gold has got a low volatility. It's a little more predictable, and we could use the 3 times or 2 times leveraged gold fund, just like we did last time. We ended up doing about 24% return in gold, outperforming gold miners with less overall risk and uncertainty. Gold miners can move pretty quick and be a little more random with the stock market. So we'll see if we go miners or the leveraged gold ETF in the near future here. That's what I'm thinking at this point. Looking over at natural gas, up another 3.5% this morning, was up 4.5% earlier this morning. It's pulling back a little bit. Overall, this feels like an exhaustion type of gap. I'll most likely issue a profit taking at the open. I feel as though it's something like this, where we've had this first pullback. We had a nice recovery on Friday. Now we're getting a gap up here, and anything could happen. We could fizzle back down, but I do want to lock in some gains here. Sell half of our leftover position, and it'll leave us with a quarter of the position left. If this does have momentum and have the second half of this move up, because you could look at this as the first half, here's the bull flag, and the second half, there's a lot more potential here. Then we could potentially get the rest out on a measured move to the upside here for nat gas. But we got to be aware this is a gap, feels and looks a lot like this gap over here, and it could just fizzle back out again. We've seen that natural gas do that for years. Going back in time, it's just fizzled out each time. So we're finally on that up and up where we're starting to make higher lows, higher highs, and maybe we're more or less on an upward swing. But we got to be aware. We got to take profits here. At this point, it's up 35, 36% or more actually on our opening position. So we can lock in gains and we'll ratchet up our stop as well. I'll send out an update with new stops and targets and probably the partial trade alert there to take profits. Looking over at crude, up 1% this morning. Let's just zoom into the chart. Again, I'm not a fan of this chart. Really, all these blue lines I have in here, they're kind of negated now with all this price movement going on. Overall, it's kind of just a real messy chart. If you look at it, there's no clean definitive levels. Overall, just leaving crude as is for now. In the grand scheme of things, it looks like a large bear flag that's working its way through here. Again, it is also at long-term support down in this 51 range, and you could argue that potentially it's got some big kind of falling wedge or falling trend line here that it could ping pong around in. Again, not a very tradable pattern in my opinion. Anyways, that's it for this morning. I'll talk to you a little bit. Bye-bye.